nominated a sometime critic of the Federal Reserve to be governor of the central bank. Marvin Goodfriend is a professor at Carnegie Mellon University and a former research director at the Richmond Fed. Earlier this year, Goodfriend told Congress that the Fed had failed to secure the credibility of its inflation target. And Matt Lauer's problems have now gone international. New Zealand now wants more information about the television host who was fired by NBC News for allegations of sexual misconduct. Lauer owns a large estate on New Zealand's South Island. Foreign buyers of land there must be of good character. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Taylor Riggs. This is Bloomberg. Tom, Francine.
Taylor, thank you so much. Now, oil prices have edged higher as investors watch for OPEC's next move on production curves at today's meeting. Well, Bloomberg's Youssef Gamal spoke with the Saudi oil minister, Khalid Al-Fallah, ahead of the meeting in Vienna, who said there's still a lot of work to be done.
When it's time to adjust to normal production levels, we will need to do it gently, and we will need to do it in a very thoughtful and considered way, and we will do it in consultation amongst the participating countries, and those countries with spare capacity will gradually bring back their production to meet market demand.
A lot of work to be done. Youssef, does just that mean I'm waiting for Russia? If they join in, I will too?
Yeah, that's going to be the key question. I mean, times have improved quite a bit. You think of the double-digit rally that we've seen in Brent crude since 2015. You look at what's going on with inventories in terms of the OECD and, of course, in the United States, coming down and back closer to the 5-year average. The consensus growing around a 9-month extension after those cuts expire in March. The Saudi energy minister wasn't too convinced about talking about an exit strategy just yet. He said it was too early to do that, and we're now waiting to see whether we're going to get more input from the Russians. They, in the past, have had quite a few reservations about just extending for the sake of extending. They want to see, well, how we're going to draw this down, because we've got to tell our companies what's going to be happening in the future.
All right, what happens after 2018, Youssef? I guess the concern is that, you know, OPEC and non-OPEC don't fold in shale producers in the U.S., and those are the ones with the huge, you know, production swings. They can turn on the taps and turn them off like a light switch.
Yeah, it's remarkable, the versatility and the ability of U.S. producers to bring capacity back online. It's surprised even people here at OPEC in Vienna. And the question becomes then, after 2018, how gradual a drawdown, a slowdown are you going to do in terms of reducing those cuts, in terms of trying to bring the market back to normal conditions? Saudi energy minister and many of his peers as well, including from Iraq and Iran, said it would be a very gradual process, and that is something, of course, we are keeping an eye out on. But also there could be an upside surprise in terms of, well, what if the price rises very quickly in the first or second quarter of 2018? Well, that's when the summer meeting comes in, and you could see a little bit of recalibration to adjust to market realities and to the data, Francine. Tom?
Youssef, thank you so much. Youssef Gamal Al-Din in Vienna at these important OPEC meetings. Stephen Schork is in Philadelphia, not Vienna. He's been there. He knows these can move markets as well. Steve Schork, we've got a range breakout on oil right now. I got a fancy chart of an elegant, ever so slightly breakout in West Texas Intermediate. Is it for real? Are we breaking higher?
Well, we certainly have had a heck of a ride higher right now, Tom, and certainly I'm not going to rule out the potential of $60 oil on the NYMEX right now. As far as the OPEC meeting is concerned, of course, the big question now is the ability or the speed at which North American shale producers can respond to price signals. And, Tom, until this point, we've seen 4 consecutive weekly highs in U.S. crude oil production. The EIA is projecting record production next year.
Right.
When we look at these high prices, Tom, yes.
No, keep going. I'm loving it. Just keep going. I'm getting my next thought together.
Yeah, absolutely. So when we look at these high prices and this rally, right now the position in Brent crude oil is up 22%. That is the shorts, the hedges made by producers. In fact, producers have sold enough oil in the Brent market to offset a 1 year's worth of production or demand in the North Sea. We've seen an inversion on the NYMEX. That is to say that speculators have recently pushed their highs to a 36-week high, while the shorts have pushed their position to a 30-week low. So clearly there is a lot of money flowing into this market.
Okay, Steve, your magic is in your newsletter is the granularity of the American system. You know the elasticities like no one. Can they really bring on the production?
Yeah, absolutely. And right now, and look, when we started to see OPEC and take a more hawkish or dovish view, I should say, and we had the price collapse in 2014, 2015, OPEC actually did North America a tremendous favor because they did what the Fed refused to do. We're keeping their cheap, retarding the cost of money, and we had this explosion in shale. What we've seen the North American producer now over the past 2-3 years is increase their efficiencies. So now they don't need oil necessarily as high as they did 3-4 years ago. So that said, at these prices, you're giving North American producers a tremendous opportunity to reset their hedges and clear the path for increased production in through 2018.
Stephen, we're talking so much about production that we forget to talk about demand. We heard from the Saudi oil minister saying the IEA forecast was a little bit too glum. Where's demand coming from for oil?
Yeah, absolutely. The OPEC is forecasting an imbalanced demand exceeding supply by 600,000 barrels a day in the new year, while the IEA is predicting a deficit demand trailing supply by 100,000 barrels a day. So therein, we have a 700,000 barrel disconnect between the two agencies. What we have to keep in mind, and I'm not confident that OPEC has fully gained this, is the fact that we've had, as far as the demand elasticities, we've always had the first variables over the past 40 years to impact consumer behavior, and that has been the price signal, the peaks and troughs with prices. But we've never had, until recently, the other variable that impacts behavior, and that is certainly the substitute. So we have the tremendous growth of EVs, electric vehicles, and quite frankly, we're not going to see, and the whole dynamic has changed. You're not going to see the demand response to prices that we are used to in the past, and therefore, I do think, and I'm more on the IEA side, that demand will trail supply response in the new year.
So I'm jumping ahead, but does it mean that OPEC and non-OPEC and Russia may have to cut production, beyond the 9-month extension if we get that today?
Well, I certainly expect to see, I think OPEC has painted itself into a corner. Of course, the linchpin will be Russia, but I'm certainly expecting to see an extension of the cuts through the end of next year. And then they'll need to, and as the previous report said, we'll need to recalibrate when we get into, and keep in mind, Wall Street loves higher oil prices. They're certainly betting that way. Their positions are at near all-time highs as far as length is concerned. More importantly, from a risk parameter statement, with the way we measure it in the Schork report, we're still only about 5/7 of the way that Wall Street has demonstrated its risk tolerance, which peaked at an all-time high in the first quarter of last year. So I do expect to see a significant amount of money continue to pour into this market, therefore being supportive of price. And then we'll need to recalibrate on the production when OPEC meets again in the new year.
Well, Steve, I'm sure in Vienna they're going to be watching your Philadelphia Eagles this weekend. Stephen Schork, thank you.
There we go, 10-1.
There we go. Thank you so much from Philadelphia with the Schork report. Jeff Dennis with us with UBS. And Jeff, bring us up this chart, Jason, if you would, right now. This is the